Hello guys, welcome back to a new episode. This is RALLYTOP Investing 3.0. In this video, I want to teach you a very simple strategy that you can actually use to make good money for yourself. This strategy is so powerful that if you can master it, then the sky is not your limit. You can use this strategy on any time frame. You can use it on any instrument. We are going to be making use of only two concepts, and these two concepts are ICT concepts. So a shout out to ICT. We are going to be using ICT breaker block in conjunction with fair value gap. That's all. Powerful strategy. Now, but you need to follow the rules. And what are the rules? Number one, you must trade in line with the direction of the market. When I mean trading in line with the direction of the market, it could be long-term direction of the market. It could also be short-term direction of the market. As you know, price moves in impulse correction. Okay, so you can trade on the impulse phase during the correction. You can also trade the correction itself. I'm going to show you all of that. Now, the number two rule is this: where there is going to be a break of structure, where you find a break of structure, that break of structure must not happen with more than 2 candlesticks max. Anything more than 2 candlesticks, avoid it. Another thing is that we're not going to be using our conventional way of identifying structures in the market. I'm talking about waiting till price takes out inducement and all of that before you can identify your high or low. We are going to be using the retail structure in this very strategy. Now, let me take you to this diagram and show you what I mean. Then you can understand better by the time we come to the live chat. Now, we are very much bearish here, as you can see. Price is printing lower, low, lower, high, lower, low, lower, high. So long term, we are bearish. But if you take a look at this retracement phase, you can see the price is printing high, higher low, higher high, higher low, higher high. All right, this is the short-term move that I like to capitalize on so much to trade. I like to capitalize on this one more than this long-term structure. You can actually trade the same strategy with this long-term structure, but I find out that this gives me more opportunities in the market and it helps me to make more money in the market. Only that you need to follow the rules I've told you. Now, how do you use this strategy? Take a look at this. This is a break of structure. I'm talking about retail break of structure in this instance. After break of structure, you know there is an area of interest that you will identify here. Now, this area of interest is that once price comes back to tap into it, you want to see price going higher, because this short-term move is higher high, higher low, higher high, higher low, higher high. So we want to see another higher low before we have another higher high. So that's why we have identified our area of interest here. Now, a situation where price comes back down to violate this area of interest and closes below it, that's what ICT calls breaker block. This zone will not be known as breaker block until price violates it and closes below it. That's when it will be known as breaker block. It will be converted from the normal order block to breaker block. Now, this breaker block is not a high probability zone to take trades from. This is not the way ICT teaches its own. I just find a way out of using this breaker block as a high probability zone. So I needed to do some backtesting and find out what could really validate this breaker block to make it a high probability zone, because I found out that a lot of the times price will come and blow through this breaker block. It will violate the breaker block. So how can you make this breaker block a high probability zone? The way you can do it is, in front of this breaker block you want to see fair value gap. If you don't find a fair value gap, please don't use this breaker block as an entry zone, because 80% of the time it will fail. It will fail. Now, you need to find a fair value gap on this leg that took out the zone. You need to find a fair value gap. Once you can identify a fair value gap around this very breaker block, it has to be around this breaker block. That fair value gap is what becomes high probability zone for you to take your trade from. So in other words, what I'm telling you is that the breaker block is validated by the fair value gap. A fair value gap is validated by breaker block. So that's the strategy. Simple as that, straightforward. So you're waiting. So for instance, if you find a fair value gap just around here like this, if you find a fair value gap, that fair value gap is where you want to take your trade from, not this breaker block. It's not this breaker block. So you can do away with this breaker block and focus on this fair value gap. This fair value gap without a breaker block is not a high probability zone. I want you to understand that. So price will come and tap into this 70 to 80% of the time. It will respect this fair value gap and start going down or upward depending on the direction of the market. Simple. So that's the strategy. You can use it on any time frame. You can use it on any instrument, any asset. Only that you need to follow the rules. I've told you, number one rule must be in direction of the market. It can be short-term direction, it can be long-term direction. 2, the number of candles that take out this breaker structure should not be more than 2. In fact, preferably it should be a candle wick. Simple. So let me take you to the live chart and show you 1 or 2 examples before we call it a day. Now take a look at this. Let me show you what is happening here. Now from this low, look at what you have. You have a high, you have a pullback, which is a low. You have another high here. You have a pullback. You have another high. That's what you have in the market. Let me pull it out for you to see. This is the short-term move I'm telling you about. Now, look at it. Price violated this high. That's a break of structure. After break of structure, you know that there's going to be an OB there or an area of interest. So you are expecting price to come back to tap into this OB to do what? To go higher. But price fails to do that. Price breaks through this OB here. So this OB here, this bullish OB here, now is converted to breaker block. That's what I'm talking about. So now, as you can see it here, where is our OB here? This is our breaker structure. Look at it. This is the last structure point. As you can see, it took it out with a candle wick. Very good. It took it out with a candle wick. And where is our OB? Our OB is simply here. All right? That's our OB. So we are waiting for price to come and tap into it and go long. Simple. Simple. So let's continue to play price and see what happens. As you can see, price has violated this zone here, has violated it, and price has closed below it. Now once that happens, you look for your fair value gap. Where is your fair value gap? Now in some instances you will find 2 or 3 fair value gaps. You need to mark them out as one block. For instance, look at from here to here, there is a tiny fair value gap there, and from here, this candle's low to this low, there is a fair value gap there. So what you want to do is to mark from this low here where you have this fair value gap until this low. That becomes your area of interest that you want to take trade from. Once price comes back to tap into this, you want to take your trade from there. Okay? So in framing this zone now, we can frame it this way. We can frame it this way. This is our stop loss just above here. Okay? And our take profit just here. This is your first take profit that you will look to target. Simple. So let's advance price and see what happens. So as you can see, price tapped into that our zone. It tapped into it and dropped. Now, once price takes out this low and closes below it, you can move your stop loss to break even, to be in a risk-free trade. But the minimum you should go for is 1 to 3. That's the minimum using this strategy. 1 to 3. You can go more than that depending on the structure of the market, but minimum is 1 to 3. So once price takes out this first structure low here and closes below it, move your stop loss to break even. And if we continue to play, maybe price went lower than that. Let's go. Can you see? So you would have made good money from this trade. Can you see what I mean? So that's the first example. I don't want us to keep long. Let me show you one more example. This is another example. As you can see, let me show that to you. First of all, it has to be in the direction of the trend. And look at this. This is low, lower high, lower low. All right? Lower high and lower low. So we're in the direction of the trend. So we are bearish here. Simple. And then let's mark out the structures here now. Look at this high. It took out a broke structure there with a candle wick. Let's say maybe 1 or 2 candles here. So where is your area of interest here? Where is your OB? Now this is your OB. So we're expecting price to come and tap into this OB, and then we go long. But look at what happened. Price broke through this OB and closed below it. Once that happens, where is your fair value gap to support this breaker block? This now becomes a breaker block. Where is the fair value gap to support this breaker block or to validate this breaker block? And look at this. The low of this candle is not touching the high of this candle. So that becomes your fair value gap. So when price returns, it wants to tap into this fair value gap because of this breaker block. So that's when this breaker block becomes effective. In this case, the breaker block, the fair value gap is not inside of this breaker block, but it's just around it. That's what you want to see. Now, so we can take out this breaker block and concentrate on our fair value gap. This is where we want to take trade from. So we want to frame this trade to go short. So we want to go short from here. Give a buffer, then your stop loss just above, and then your take profit. Of course, I said target 1 to 3 minimum. In this case, let's look at the structures here we can really target. This one, double bottom here. That's the first area of interest. But once price takes out this first area of interest, which gives us about 2.69 RR with a candle closure, move your stop loss to break even and begin to trail your stops. Simple. And so therefore, we can now continue to play price and see whether it will go in our favor. So as you can see, price went back to tap into that our area of interest, and let's see. And price now, see, price has taken out this double bottom here. So you can move your stop loss to break even and continue to trail your stop, and let's see what happens. So can you see what is happening? Let's see whether price will go in our favor. It is already in our favor. All right? So you are in a risk-free trade. So even if price goes against you now, you are in a risk-free trade because you have moved your stop loss to break even. Simple. This is a very powerful strategy. Let me show you one more example before we call it a day. Okay. So this is the third example, and I think we are going to call it a day at this point. Now, I want you to understand, some of you guys may be thinking that I'm cherry picking. Well, I'm not cherry picking. There is no way I can show you in real time other than hindsight this way. So all you need to do is that don't take my words for it. Do not take my words as a gospel. Go back and use this strategy, this concept to back test. If it resonates well with you, then you can go to your live chat and start using it. But please do not take this as the gospel and just take it straight to your live account to start trading. Please do your own due diligence and be convinced, first of all, that it works and resonates with you. Okay? So now, this is the last example. As you can see, our break of structure is here. Now, let me show you the structure of the market here now. It's clear. Let's just start from here. Price is printing lower low, lower highs. This is very clear. It's not something I should be telling you about again. As you can see, so this is the structure we have in the market. Lower lows, lower high, as you can see. So first of all, structure is in line with us. So now there is a break of structure here. Now with how many candles? One or two candles. Two candles. Okay, which is all right. And where is your OB? Look at this, your OB here. That's your OB. So we stretch it out. So price is within this OB. So we are expecting price to come down from here. But let's see what happens. So price blew through it. We have gone too far. Let's do it from here. Like from here. So price blew through it and closed above. Now, where is our area of interest here? Your area of interest must align with this breaker block. This is a breaker block now because price has blown through it. So now the low of this candle, I think is this one, is not touching the high of this very candle. Where is the low of this candle? Let's be sure. Okay, so this is the low of this candle. It's not touching the high of this candle. Okay, so let's advance price and see. So we want to take our trade from there. Okay, that's buy, and our stop loss is just below here, and our TP is here, this high. Look at the high we are targeting as our first TP, and that gives us a very decent trade of 3.54 RR if it goes our way. So let's continue to advance price. So we are tapped into the market, and boom, the thing just went straight to our take profit. It went straight to our take profit and continues to go higher. Let's see whether it continues to go higher. Can you see that? It continues to move ahead. This is a very powerful strategy, guys. You need to understand. Please just go back and back test on it. Okay, guys, thanks for watching. If you are new to our channel, please consider subscribing and hit the notification bell so that anytime we publish a new video like this, you'll be notified about it. And don't forget that our promo is starting, has already started this week. That is on the 12th. It started on the 12th and is ending on the 20th. You have 50% off of our mentorship fee. Okay, why? Because on the 8th of September 2024, we are celebrating 3 years of RALLYTOP Investing YouTube channel. That's the reason why we are giving that opportunity and giving you 50% discount. Okay, so please hurry because we have limited slots. Hurry to take your seat right now. If you want to learn more of such trading strategies, join us and then you'll be glad you did. All right, guys, I see you in our next video.